Hey guys, sorry for the absence of my videos in the past couple of days. I've been pretty busy, but today I wanted to do something a little different. I haven't been trading the past couple of days because of all this news, but I want to do something different. So I'm going to start a new series, and basically we're just going to be back testing. So, yeah, Monday we had lots of PMI, and today we have Powell speaking, which I don't want to trade because well, you guys should know, PMI and Powell job openings, all that unemployment claims, all that stuff influences the market very heavily. So I didn't want to trade today, especially because the Fed chair is speaking. Tomorrow, lots of news. I probably won't trade tomorrow either. Thursday, I think I will trade Thursday. But basically, we're gonna back test on Monday. So we go over to the charts, and we'll do ES and NQ. We want a 1 minute, switch it to the daily. So basically what I like to do, and yes, obviously you can see what price did, but I usually just don't look and I rewind it. I just look at the date. So Monday, I took it to 4 hour here. So replay Monday, July 1st, 6 a.m. Alright, as you guys can see, this is Monday, July 1st at 2 a.m. So we're going to come down here, and this just puts the next bar, the next candlestick. And so now we're at 6 a.m. So basically what I like to do, I like to scale down to hourly. When would I get on the charts? Lately it's been 9-ish, but I think that might be a little bit too late. So we'll go to, alright, so we can see that's 9. So scale down to the 15 minutes, see where we are, and it's 9:45. So rewind that to, let's see, let's go to 8:15. Alright, so this is 8:15 a.m. The first thing I would do, I would look at the daily. Now we can see we're in a trending range, but the candle is bullish. So, and we're also making new all-time highs, and we're in an uptrend. So what I would do is I would look for confluences. We could see there's an imbalance right here, so I would expect price to drop down. Order block right here, and it looks like we haven't had a retracement. So we went up, came down, went up, and we haven't come down yet. So sort of expecting price to be bearish, but then we could scale down to the 4 hour, and same thing, it's in a trend. And actually we just filled this big imbalance right here. I'll mark it out for you guys. Right here we just filled this imbalance, and we haven't really seen anything happen, which gives me another sort of bias that market is probably, at least I think, going to go down. So yeah, that's the 4 hour. Then we could scale into the hourly, and okay, we have obvious liquidity here. Obvious liquidity also right here. You can see all these lows. Liquidity lies under these lows. So what I would expect price to do, I would expect price to come down, take this liquidity, have a retracement up, maybe come down, fill this imbalance. But today, I'm just going to be looking at price targeting this liquidity. So this is 8 a.m. We scale into the 15 minute, and we can mark out an equilibrium point. So from the high to the low, this is the, once price comes up here, it's in a discount for a short. So it's 8 a.m. We could click next, 8:15. This would be 8:30. Not really seeing anything yet, but what we could do is we could mark out, we see an order block right here. Also we see this could be liquidity right here. That could be possible liquidity. We could also have more liquidity up here, and then we could just periodically check back on the hourly, see how our bias is looking. And so far right now, I want to see price either come up, take this liquidity, or fill this order block, and then drop. And we also have more liquidity right here. So if we scale onto the 15-minute, and keep in mind the news, guys. So this is Monday, so at 9:45 and 10 a.m. we have PMI. So we're on the 15-minute. We see this price is actually in a discount on the 15-minute. As you can see, it went up here. Actually, we could also see it fill this fair value gap right here, which is, and we can assume that it's going to go down. Maybe fill its order block, go back up, maybe take liquidity. But right now I'm bearish. So yeah, we could wait a little longer. It's not 9 a.m. yet. Markets haven't opened. Okay, 9:15 a.m. We can scale down to the 5-minute from market open. Looks like there's a bearish fair value gap here, which wasn't really respected. And also more liquidity here, more liquidity here. This liquidity also wasn't really respected. But ultimately, I want to see price come up, take these highs, tap into this order block, and drop. Okay, so 9:25, 9:30. This is market open, guys. We see price come into the order block. 9:40. PMI is going to hit next candle. Okay, we can see market's bearish. So, also I forgot to mark it out, but I just saw this little 5-minute fair value gap right here, which we can actually see market dipped into and dropped. Alright, and then more news at 10 a.m. So, and 10 a.m. Yeah, okay. So, we'll just see what happens. Yeah, there we go. Alright guys, so as I said in the beginning, earlier in the video, I was expecting price to come down, take these hourly lows, and that's exactly what price did. We scaled down to the 50-minute, found an order block, marked out equilibrium, saw it was in a discount, and we were bearish. Scaled down to the 5-minute before market open, and I should have caught this earlier, but there was a fair value gap here, and we saw a price right to market open, dip into the order block, fill its fair value gap, and how do we enter the position? We should have entered, if it was a live trade, we should have entered a short position, because we were bearish, remember? We should have entered a short position at the break of structure, so, which would actually be, or we could, if we wanted a more precise entry, we could have scaled down to the 1-minute, and then look at this, guys, high to low, tap in it, equilibrium price, discount, and break of structure right here, guys, because this high made a lower high than this one, so break of structure right here. Let's delete these real quick. So if we were actually live trading, right where we should have entered the position was right about here, and I would have set my stop losses above this liquidity. Let's just do 50 ticks just to be safe, give this room to breathe. And as I marked out in the beginning, I would have set my stop losses at, sorry guys, hold on. I would have set my take profits right here, 15-minute low and this hourly low, and as we can see, it would have been a winning trade for a 1.5 risk to reward. Would have liked a little less, so that's something we could keep improving on. Alright, we're on NQ. We're going to do the same thing that we did. We're going to replay this to Monday, July 1st at, let's do 8 a.m. Okay. So we go into the 15 minute. Let's see where we actually are. 7:45. Perfect. Okay, let's just skip ahead. So now we're at 8:30. Here's what I'm planning on getting on the charts. So 8:30. Go to the daily. And we can see it's very similar. ES and NASDAQ move in the same sort of pattern. So we can see it's still trending. I feel it's fair value gap, but not much on the daily, so we scale into the 4 hour. See this fair value gap fill. Not much movement though. We can see price went up. I'm still looking for a retracement down. Take these lows maybe. Right here. Liquidity. Fill this imbalance. Fill this imbalance right here. Right here. And that's basically what I'm looking for today. So we can scale down to the hourly. Target these lows. Hourly liquidity. We can see this imbalance has been filled. And basically, so it's 8 o'clock right now. Could scale down to 15 minute to look for more confluences. Obviously, we can mark out this equilibrium right here. We can mark out sorry, I don't know why I clicked on brush. We can see this fair value gap right here, respected, so leaves me more bias. Liquidity right here looks like it's gonna be taken, and we could actually check that right now. Yeah, okay, that looks like it was a liquidity sweep. So we're on 9 o'clock. It says imbalance. We see more areas of 15-minute liquidity up here. We see an order block, an hourly order block right here. So we can scale into the 5 minute and wait for market open, see what happens. And as we're on the 5 minute, we can look for more confluences. Obviously, liquidity sweep. We can see that it wicks this high, drops, and look, guys. Right here, another fair value gap was just formed. Another fair value gap right there. So when market opens, I'm going to look for price to either fill this fair value gap, take this previous liquidity, fill some order blocks, and also on the 5 minute, we can see high to low, prices in a discount. So wait for market open. Well, it's 9:25. Next candle is market open. We can see price come up, fill this imbalance, fill this order block right here, and drop. But I wouldn't enter the position just off of that because we still have news, and that's not quite break instruction until the candle closes. Alright, this is market open. We can see fill this order block, fill this imbalance, and price retracement. So I'm going to wait till 9:45 to enter position. It's a 9:45 candle. Okay, so we can see it has the same effect as the as ES, and it's looking bearish. So like I said, I want to target these lows. Here, I wouldn't necessarily. A problem I found with myself is I'm too hesitant to enter positions based off of news. So I want to say I should have entered a short position right at when market filled this, came down, broke structure here. I should have entered a short position, put stops above these highs, take profit all the way down here. With that's a 1 to 6 or 6 risk reward, which maybe a little bit unrealistic. So we can see what happens. And yeah, we would have got stopped out. Okay, so I was right in not wanting to enter position here because I wanted to wait until another confluence, which we didn't get. So in the future, I would not take a trade like this until I have a confluence that I like, and I wouldn't jump into a position just because I feel like I'm hesitant. Because look, I was right. So that's gonna be the video, guys. Thank you guys for watching. There'll be more like this in the future.